Hello, a very warm welcome to my YouTube channel. This video is particularly dedicated to India first year MSc and CC students who are going to appear for the examinations in this March first week. And you will be getting a series of videos on accountancy. So this is basically first year intermediate accountancy series starting from introduction to accountancy. In this video series, I will cover basics from the introduction to accountancy, what is journal entries, journalizing the transactions, then posting it into the ledger, then making a subsidiary books, then next bank reconciliation statement, then next posting them into the ledger, making trial balance, then next preparing the final accounts of sole trading concern. This is what which I going to cover in this video series. I would like every student who needs to practice the accountancy and know the tips and tricks to score the 50 out of 50 score in the part B of your commerce examination. You must watch this video till end. Let us start. Introduction to accountancy. What do you mean by accountancy? Let us see. Accounting is a science. It is a language of business. Basically, accountancy is called as a science. It is a language of business. Why it is called a language of business? In accounting, in basically in business is a human activity. Generally in business, we conduct a lot of transactions where giving aspect and receiving aspect, all these things will be considered. Generally there will be a lot of transactions, so without the help of accounting it is very difficult for a business to remember all those transactions. So there is a need for accounting. So accounting, what do you mean by accounting? Accounting means recording all the transactions, then processing the information, whatever financial information we have get from the accountancy, then preparing the reports and communicating these reports to the person who are going to make the judgments, that is decision making. So with the help of these uh, statements, that is P&L account and balance sheet, we are going to present this P&L account and balance sheet to the persons, to the owners of the business, and they are going to make the decisions what changes we should do in the business for the next upcoming year, for the next upcoming financial year. So in this way it also act as a way of communication. That's why it is termed as a language of business. Basically accounting is a science and art of correctly recording in the books of accounts all the business transactions which are related to monetary terms, and preparing the reports and communicating it to the owners or the users of the accountants, users of the business. Okay, users of the reports. Next, come towards the definition. American Institute of Certified Public Accountants, generally CPA, CMA, CPA, we have heard and saw it on the many banners and posters. So this is the authority who issues us the gazetted certificates for the public accountants of America. AICPA, American Institute of Certified Public Accountant, defines the the art of recording, classifying, summarizing in a significant manner in terms of money transactions and events, which in part at least of financial character, and interpreting the results thereof. It means accounting is a science and art of recording. First, the transactions are recorded, they are classified, and summaries are prepared in a significant manner. In terms of money transactions, only the monetary transactions are taken into consideration. Then, at least of a financial character, and interpreting the results thereof. The results are communicated to the users. Next comes objectives of accounting. What are the objectives of accounting? The first objective of accounting is to maintain accounting records. What is the first objective of accounting? To maintain accounting records. It is very necessary to maintain accounting records. So proper, accurate, systematic, and chronological wise records of the transactions are maintained with the help of the accounting. The first object of the accounting is to maintain the proper, accurate, systematic records in a chronological wise order. My question is, can a business run without the help of accounting? It will be very difficult to run the business without the help of the accounting, because there will be a lot of transactions happening every moment in the business. It is very difficult for a human brain to remember all the transactions. So there is a need to maintain the accounting records. Then next, to find out the result of operations, to find out the result of operations. Suppose we have started a business in the year 2020-22. So it is the financial year, ending of the year 2023. So we are going to prepare the final accounts for the year. So when we are preparing the final accounts, by with the help of accountancy, by with the help of preparing the accounts, we are going to know the profit and loss for a particular year, whether our business has incurred a loss or earned a profit. It is going to be informed by with the help of the accounting process. Next, to ascertain the financial position. What is the financial position of the business? What do you mean by financial position of the business? There are two things, basically the two terminology used in the accountancy. First one is assets. Assets means nothing but properties. Next come liabilities. Liabilities are nothing but obligations towards the business. So how much properties does the business own? What are the properties in the business? That will be the strength. It indicates the strength of the business. And how much liability, how much the business is supposed to pay to the other outside parties, how much the business owes and how much the business owns. So this can be ascertained or find out with the help of accounting. So our third objective is to ascertain the financial position. Then next, to communicate the information to users, to communicate the information to the users. Generally, at the end of every financial year, the period between which we close our accounts, the period at the end of which we close our accounts, financial statements are prepared. For example, profit and loss account, balance sheet. So with the help of these balance sheet and profit and loss accounts, the business owners are going to take decisions. They are going to revise and review their policies. How much the amount of profit we have earned in this year, how much losses we have incurred. So what new policies can we implement in our business, how to revise our new policies, review the policies and revise the policies. So the and one more thing, the another objective of accounting is for compliance of legal purpose, for information for legal and tax purpose. There are certain acts, for example, Companies Act 2013, under which every business needs to maintain its books of accounting. So it is compulsory for every business to maintain the books of account, and it is also mandatory to comply all the documents under the Income Tax Act. So these are the objectives of accounting. I hope you got it. So let's discuss our next slide, that is bookkeeping. What is bookkeeping? Bookkeeping is the first step of accounting procedure. Basically, bookkeeping means identifying the transactions from various sources such as cash memo, receipts, invoice. So from these cash memo, receipts and invoice, they act as evidence for happening of a transaction or event. So these are considered as an evidence. From these evidence, we have to first identify the transactions which are related to business, and only they are measured in terms of monetary units, that is money. only those transactions are going to be recorded in the books of accounting. In which books? That is journal and ledger. In these two books are we are going to record in these two books we are going to record the transactions. So bookkeeping is the first step of accounting. It is a part of accounting. Bookkeeping is the first step of accounting. It is a part of accounting. We are going to record the transactions by identifying from different vouchers, cash memos, receipts and invoices into the journal or ledger. Now accounting process. What do you mean by accounting process? An accounting process starts with the happening of a transaction. Whenever a transaction takes place in a business, it is to be identified from cash memo, receipts and invoice, and different types of vouchers. And they are to be checked whether they are related to business and whether they can be measured in terms of monetary units. If they are measured in terms of monetary, that is in terms of money, then only they are going to be recorded. Then next step is identify transactions that are recorded in journal and ledger in chronological order. In chronological order. Next, these recorded transactions are classified. Classifying means, suppose all the transactions related to sales, all the transactions related to purchases, and so on. For example, there are 13 transactions related to sales. These all transactions are recorded at different places in journal and ledger. So these transactions are again extracted and recorded, classified into one single heading, that is sales. And for suppose we have 15 purchases transactions, so these transactions are classified into the heading of purchases. So these are called as classification of transactions. Then next, from these transactions the balances are extracted. Then next, they are summarized. Balances are extracted and they are summarized in order to prepare trial balance. From these trial balance, we prepare P&L account and balance sheet. Okay, these are the financial statements. These are the last step of accounting, and with the help of this P&L account and balance sheet, we are going to find from these P&L account and balance sheet, we are going to find whether the business is gaining profit or incurring loss, and financial strength and weakness of the business. The financial strength and weakness of the business and profit and loss is identified with the help of analyzing the profit and loss account and the balance sheet, which are the last step of accounting process. And these steps are to be followed in the accounting process. Now, what is accounting cycle? So basically, accounting cycle. An accounting cycle refers to the process of accounting system. See, whenever a business transaction occurs, these transactions are recorded. Bookkeeping is done by the clerks. So these business transactions are first recorded in journal. Then these journal transactions are then posted into ledger. Then these ledger transactions are balances from these ledgers are extracted and trial balance is prepared. From these trial balance, trading account, profit and loss account, and balance sheet is prepared. So basically, this procedure follows a round circle shape, which is called nothing but accounting cycle. Thank you for watching this video. Do comment whatever doubts you have in the comment box. Thanks for watching.